Happy Monday.
Hey, happy Monday to you, Scott. Steve, what's shaking over
Well,
there in California?
it's dry and smoky, but happy Monday.
Happy Monday to everyone in attendance. Looks like we've got a pretty good crowd here. And Juan, I'll say this real quick. If you can't hear us, log out, log back in. Sometimes that fixes it. Your mic is muted, but not your speakers. All right, ladies and gentlemen, welcome to another edition of the Office Hours webinar. I'm your host, Jamie Hodge, and of course, got my trusty wingman as always, Steve Gomez. Today's the 12th, and boy, man, November's almost halfway over, Steve.
Yep. Yep.
And Christmas is coming in more ways than one. And we'll get into a little bit more detail on what I mean by that in just a second. But before we get started here, just got to take a quick moment to take care of the lawyer speak and just let everyone know that we present all of this information to you for educational purposes only. If you do need investment advice, what to do, when to do it, all that good stuff, please seek out a registered investment advisor or some other licensed individual that can help you out with that task. And alluding to Christmas is coming in more ways than one, auto trading to trade ideas is coming. It's coming soon. It's already been here in one format, and that is you can take strategies that you fabricate with our software and our back tester, and you've always been able to automate those with our IB add-on known as Brokerage Plus. Of course, it's been in beta for a long time as we get the kinks ironed out and the bugs and all that good stuff. But we have more coming as well. Towards the first of the year, roundabout that time, we will be enabling Holly strategies to be automated as well. Okay, so it's coming out of beta on the 15th of this month, which is Thursday. All right, so what does that mean exactly? It means if you're already a premium subscriber, whether it's monthly or annual, you are grandfathered in as long as you keep your subscription current. You'll be grandfathered in. You'll have Brokerage Plus access for the life of your membership. After the 15th, then it will be an add-on cost of $1,100. So if you've been on the fence about whether or not to get Brokerage Plus, well, the 15th is Thursday. That's the cutoff date. Anybody that has a subscription before then will be grandfathered in. You can read all about it by clicking on this link down here, tradeIdeas.com/Brokerage Plus. And of course, we can see the countdown. Time's a ticking. All right. Now, it looks like there's probably a handful of new people in here. Just looking at the attendee count, it's higher than it has been. Of course, we just wrapped up our test drive, so it's to be expected. So for the regular attendees, bear with us here. You know the drill. For the new people that might be in here for the first or second time, we also like to take a moment to tell you about the vibrant community that we have built around the award-winning unique technology that is Trade Ideas. So Barry's Trading Room, right up here in the left-hand corner. Barry Anderson is the moderator of his room, our room, I should say. Any day, 400, 500, 600 people in there. Barry does a fantastic job at moderating that room and showcasing his trading style and techniques while using trade ideas and showcasing how he uses it with the AI, with all of his individual windows that he likes to use for his own personal trading. Great thing about the trading room is the cost, which is free. That's a really good price. If you've shopped around on the web, seen all the trading rooms that exist out there, and there's a gazillion of them with all varying qualities, but most of them charge you for it. So just another perk that you get when you become part of the Trade Ideas family is access to a free trading room with tons of experienced traders in there and a very reputable and effective moderator. All right, Barry is the man. Of course, today's Monday. You get myself along with Steve, and then tomorrow Steve's going to take the steering wheel. Trade of the week. Andy Linloff is going to ride shotgun with him. As Monty Python would say, and now for something completely different, we like to change it up on Wednesdays, bring in Dan Merkin, the CEO and founder of Trade Ideas, and our Chief Technical Officer, Brad Williams. Always interesting, always entertaining on Wednesdays. Now, the 5 p.m. Eastern webinars we round out on Thursday. Andy takes the helm for the trading studio. I ride shotgun with him. And Friday, we do something a little bit different. 11 a.m. to 2 p.m. Eastern. 3 hours are allocated for the Friday support session. Been a big hit. Attendance numbers just keep on climbing. Had quite a crowd last Friday with the entire duration. So that's pretty much for anything trade ideas related, with the exception of really complex custom formulas. You have to send in to info@trade-ideas.com for that type of stuff. But just about anything else, and I'm sure that Brokerage Plus support will eventually work its way in there as well. So come one, come all to the 5 p.m. Easterns and the Friday support session. In addition, we used to not have as many clients as we do now. We've got tons and tons of clients and more people just adding on every day. It's getting pretty crazy. We're all excited. You can just kind of feel the electricity in the air with everything that we have coming down the pipeline towards the new year. So we used to do one-on-ones. We used to give everybody a free one-on-one training with myself, Sean, Steve, or Andy. We're just too big for that now. We'd like to keep doing it, but the numbers just dictate that we've got to find a more effective way. That's when we brought the TI University online. Beginners 101 starting on Monday, 201 Tuesdays, Wednesdays 301, and advanced on 401 or Thursdays. Okay, so these are typically an hour and a half. Start up at 9 o'clock Pacific Standard Time, Steve, unless I'm forgetting here. I know I'm in a different time zone now, so I know it's 11 o'clock my time, 12 o'clock Eastern, 9 o'clock Pacific Standard Time. You can go to our webpage, scroll to the bottom, click on webinars to sign up for all of our webinars, including the TI University as well. Okay, and of course, we like to show this slide because, well, it's very relevant, right? Introduced the first AI module, Holy Grail, otherwise known as 1.0, back in 2016. You can see how the investing community has responded to the introduction of the AI. And we just keep making it better. There's 3 AI modules now. Had a pretty dang good day today, and we're going to talk about that in just a second, but like to show everybody how the response is going thus far. Probably need to update this chart. Probably these bars are a little bit bigger by now. All right, and here we are with the agenda for the day. Of course, we've got Steve Gomez, in-house technical guru, to talk about the markets in general. So Steve, if you're ready, I'll kick it over to you.
Why not? That's why I'm here.
There you go.
Well, let me know where you can see my screen, Jamie.
Bingo. Hi, Steve.
All right.
Has someone been watching Deadpool again?
Yeah. Got my new toy. Woo! All right, guys. Welcome to my breakdown of the market. It's, last week I did 3 webinars on Monday, Tuesday, and Thursday, and got to talk about the market recap a lot. So a lot on the heels of what came last week. Just to refresh everybody's memory, take my little pen. This is where we lost the market, right? This is where we lost the bull market right there. We had every chance to have this become just a normal pullback, bounce and move higher, but an uncertain doji day, and then followed by just a collapse and a close on lows on giant volume. This is the day that we lost the market right here. So kind of since then, you can see these declining moving averages. The 10 period for the most part was the one that was holding everything down, and we talked a lot ad nauseum back here about just needing a close above that declining moving average to show that the bulls were back in control, and we never got it. I mean, tremendous downside momentum, then followed by this little gap right here, which I'll come back to. On this day, we called it a pro gap, meaning it was a minor downtrend, but the gap didn't gap down in the direction of the trend. It gapped up, reversing. So a lot of overnight neck snapping going on with the short sellers. So since then, last week we talked a lot about how the price action gathered back above the moving average, the 10 period, my favorite, turning back up. It's kind of a nice upward slope there. And closing above these key orange line pivot points. And then we went a little deeper into last week, had a nice gap up, very important. gapped up above this 200-day moving average, and for the most part held that gap for a day or two. Then we had a minor narrow range day, and I remember saying on Thursday last week, whatever the following direction day it takes out, that's probably going to be the direction that we're headed. Well, Friday rather, broke that that little spinning wheel, but it was okay because we had a nice bounce and we had a close above that 200-day. But today, all bets are off. I had said it would be nice to maybe try and fill that gap, but at least some sideways action would be constructive. Sideways action is what we wanted to see this week, and I even talked about that in the Trade of the Week email. If the bulls are going to recapture this market, they have to, at least put in an effort sideways. That gap could be filled. But again, today, now that we're at the close and we have all the data at the end, we can see that we blew through everything that we needed to hold, and we closed at or near lows. So, the S&P was down almost 2% today, and NASDAQ, I think, even worse. So, the moving averages have been destroyed. Ideally, we were going to stay above these moving averages, but we're not. Okay, the price action today definitely was not what the bulls wanted to see, and so here we are, back below all moving averages again. But if we go over to the NASDAQ, this is where the most destruction was done. I mean, we were barely above our moving averages, which were trying to move higher, and then all of a sudden today we have this giant move down, and we essentially filled this gap. Let me go in and just draw that horizontal line. So for the most part, this is where the NASDAQ needs to hold. It doesn't have another gap below it, just like the S&P does. We still have a lot of room to the downside. And again, the thought being lower high here, lower high here. Well, actually a lower high here, excuse me. But this is where the rubber meets the road, and trends start to change. What used to be buying the dip, higher lows, looks like it might become lower highs again, and that becomes no longer buy the dip, it becomes sell the rip. And so today's action was not constructive at all. And we'll see where it goes from here, but we really needed to stay above this 200-day moving average since we reclaimed it back here on this date just 2 days ago. So a couple of ideas to think about. Again, the NASDAQ is leading us lower. The NASDAQ was down 3% today when the S&P was only down 2%. So the tech wreck was one of the reasons that I had titled that slide, Tech Wreck. And, this is becoming the show me market because we didn't really get what we wanted. As I said, we needed to consolidate these pushes higher above the 200-day. We didn't get it. We bled below, and now we've crashed below all of those little hurdles that we grabbed on the way up. We've given them all back now. So it's starting to look like sell the rip is still in force. And that's the big scary bear market type discussion. So a couple of examples and a very important one. All right, guys, you know how important Apple is to the weighting of the S&P and the NASDAQ. Well, Apple has certainly just about almost filled the gap back here, but more importantly, there's that 200-day again. And I saw a lot of people on social media, and especially institutions who have been enjoying the ride of Apple forever, are not going to like to see it close back below the 200-day moving average. And so this is coming up. This will be tested tomorrow. Mark my words, and we'll see what happens. If Apple wicks below and bounces back above, that's probably going to be okay. But if Apple continues to bleed and bleeds below and stays below the 200-day tomorrow or the next day this week, that's going to also raise some major red flags that the bulls need to be concerned about. Real quickly, the Russell 2000 IWM is looking definitely like this was just another lower high in which the sellers waited for the low volume down here, the low volume pounce, the low volume action as the price bounced back higher. Well, now we're getting a little increase in volume back to the downside. So I think sell the rip is still in force over there as well. And then the Dow had a really bad candle today. It was down also over 2.25%. So nothing good happening over there as well. Gap filled and then some, and then giving back some of these moving averages. But Apple's going to be very important to watch. Amazon, also had a bad day. This thing was down 4%. So technology, and also something that was very concerning for the bulls was Goldman Sachs today. That's not your normal chart here. Look at these last days. This is
Bingo.
your average true range. Ding, 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 ding. All of a sudden, what the hell is going on here? Look at that volume. I mean, they did not have earnings according to our trade ideas. So maybe there's some news out there. Maybe there's some catalyst. I don't know. But I don't always care about the news, or I don't always care about the catalyst. What I care about is what the footprints in the sand are telling me, and this is very concerning. So then I thought, all right, well, let's take one last look overseas in Europe, because some of the negative talk lately in our market has been watching what's happening in Europe. So I look at Credit Suisse. Looks like that was yet another dead cat bounce, which was sold and is now heading lower. Probably has a date down here with the recent lows. And then, of course, the world's largest derivative bank, Deutsche Bank, derivative bank, same idea, heading back to lows. Not looking that great. You know, the powerhouse of Eurozone is Germany. Same look over there. So it's just been a drubbing of European stocks as well. So that's not going to help us either. So tech stocks, European stocks. I don't know what the hell happened to Goldman Sachs today, but that's concerning. Keep an eye on that. You know, there could be some follow through tomorrow. So that's why I'd said it's the show me market right now, and we needed to go sideways for the bulls to show me that they were back in control, and we didn't get that. So the bulls are not in control, in my opinion, right now. And that's it before my voice goes out.
Good stuff, Steve. And actually, we'll talk about Goldman Sachs again here in a minute because it was a pretty nice setup on an intraday basis. Okay, but before we do that, I'm going to jump around here a little bit because as Steve was indicating there, sell the rip. Looks like it might be in play. Sell the rip instead of buy the dip. And if you haven't done so already, go to tradeIdeas.com/ebook. Download this free ebook. It's put together by myself, Steve, Andy, and Sean, and you can learn about all these shorting techniques, 4 different ways to play the short side of the market instead of buying that dip, because it doesn't seem like the buy the dip is as effective as it used to be. And some of the patterns that we talk about towards the end of the session here are going to come right out of my section of this book. Of course, download the book. Read it. It will do you some good. If you're not familiar with how to play the short side of the market, now is the time to get familiar with that. Okay, so as I always like to point out, whether it's trading or just about anything else in life, expectations are huge. Now, what do I like to use for my expectations? Trying to drum some expectations up before the market really gets into the swing of things. More importantly, let's talk about the first 15 minutes of the market. A lot of you know that I like to make use of my large cap compare count windows. You take a peek at this one. These were the readings 15 minutes into the market. Now, as we talk about all the time, you know, you want to see a bias above 50% one way or the other, and the bigger the better typically. Now, most of the time, we don't see such a large bias to one side or the other, I should say. Back before the market started, quote unquote, correcting itself, or we started peeling off the tops, a lot of the times we would see some pretty beefy upside ratios, 56, 57, 58%. But even in a raging bull market, there was only a few days a month where you'd see something in excess of 60, 65%. And boy, you know, do you really pay attention when you see that? Well, now we're seeing the opposite, right? After the first 15 minutes today, 62% to the downside as far as big cap movers, meaning anything capitalized over $4 billion on the market cap. And then basically looking at those stocks hitting highs and lows in the first 15 minutes with the added caveat or bonus of having extremely high volume as they did that, okay? Why do I watch this? Because in essence, we can try to get a bead on what the institutions are up to. We could say that they leave digital footprints, right? And this is a way to attempt to try to track that. Now, let's take a look at the SPY. And I've got mine 5-minute candles here today. So 5, 10, 15. CC readings, massive to the downside, 62%. You're getting that information right here, ladies and gentlemen. right here. And, doesn't take a genius to see what happened the rest of the day, where the overall bias was. Where was most of the volume? Selling to the downside. Now, let's get into our good digital friend here, Holly. All right. So much uncertainty as we're in this region that Steve was basically, analyzing for us. You had a lot of people going, oh, well, this is just a nice correction. Now we're heading back up. But you had just as many people out there saying, look, tremendous technical damage has been done. We're not out of the woods yet. So, kind of the same old 50-50, but look what happened today. All right. Now, Holly, once again, I have the 3 Holly live trade blotters, or live during market hours. Keep in mind when before the market opens and slightly thereafter, these remain blank, right? And the trades pop in live in real time as they are happening. So if we sort by time here, okay, first one out of Holly Grail was 15 minutes in. Let's make sure we're sorting for the earliest times on 2.0. And lastly, but not least, Neo. All right. So Neo got started 8:55. Looks like Holly Grail got started the earliest at 8:45, about 15 minutes, 32 seconds into the open. And ladies and gentlemen, look at the bias that was established right off the bat. Not only in Holly Grail, who was 100% long, we had 2.0 showing also a very short bias. Neo kind of bucking the trend a little bit, but you've probably heard us talk about the differences in the AI modules and how Neo is the more aggressive of the 3. But the bottom line is this: majority of the trades in that opening hour, 30 minutes, even past that, all short. Okay, so I think you see what I'm talking about here when we start stringing these things together. Number one, we had this little bird whisper into our ear 15 minutes into the open. Hey, big selling, big volume. I can take that to mean, yep, institutions are doing some heavy selling. They're leaving these digital footprints. They're getting big chunks of that order done in the opening 5, 10, 15 minutes. But guess what? They can't get it all done. They can't just slam the market with sells because that would have too much market impact. Then they have to piecemeal it out the rest of the day. And clearly we can see, what impact that had on the market. But this is the way that we can get good beads on what might play out. And today it worked pretty flawlessly. Not every day is like today, but today was just, man, everything was firing on all cylinders here. So let's do this. Let's talk about what we always like to talk about when we're dealing with Holly, the AI, how to interact with her, risk on, and trade arounds. Okay, so there was a lot of risk on today. Probably a few trade arounds in there. So I'm going to come back here. I'm going to resort all my blotters by risk on. All right, we're going to talk about capturing, or how you can potentially capture some of the spread between risk off and risk on here. So let's just check the questions panel, make sure I'm not missing anything here. And looks like we're all caught up here. And, I do see a question that I will address real quickly here from Lior. Are you guys planning on creating a platform for Mac anytime soon? We do not have that on the drawing board right now, but we do have alternatives. The first alternative is using the web version, which you can use on any machine, whether it's a Mac, PC, or tablet. The second is installing Parallels on your Mac so that you can run Windows and Mac at the same time. A lot of people use that. It's a little cumbersome at first to get to know, but from what we can tell, after you get it set up, it works pretty flawlessly. So those are a couple of options for you. All right, let's take a look at this. And I love the fact that the AI was short NASDAQ today, and I believe that this trade was duplicated in Holly 1.0 and 2.0. That happens from time to time. So we take a look at why Holly exited the trade. But before we do that, let's just take a look at this absolutely gorgeous entry on Indy AQ today. So once again, 5-minute candles here. The blue arrow, when I click on the Holly blotter, the window automatically populates with all of my, pertinent information here. Entry signal, stop loss up here in the red, corresponding with the red line and this shaded area up top. And then if it does have a profit target, since this is a short sell, then you can see it's clearly marked up down here on the right margin. Didn't quite get there today, but boy, it was only because it ran out of time. It looks like it was headed in that direction, and then the market came to a close. But oh man, what a beautiful chart here. I like this for several different reasons. Number one, it came from Holly, coming out of downward momentum. So what kind of odds did we have out of downward momentum? Anything coming out of that strategy today? And I'll just give you a quick peek here as I drag my strategy panel back over here. My desktop's getting a little bit crowded here. So downward momentum, we can see if I sort by the odds coming into the session, ended up kind of last, but that doesn't really mean a whole lot when we're talking about these types of percentages here. So anything coming out of downward momentum today had a 59.3% chance of working. The strategy issued 3 trades and hit 2 out of 3. So technically it overperformed today at 66.7%. So that's where this trade came from. And look how big the spread is between risk off and risk on. What do we got there? About 70, 80, 88 cents approximately, if my math is correct. So how do we try to capture some of this spread, and why did Holly get out of it in the first place, right? Well, Holly's programmed with exit criteria. The more generic ones are stop loss got hit, profit target got hit, or the timed hold got hit. Now, I'll just pull this back over one more time. We can see anything out of downward momentum, this strategy was designed around a 60-minute hold time, right? And that's exactly what happened. Stayed in the trade for the duration. Holly did what she's programmed to do, closed that trade out on a timed exit. Now, I keep clicking off there because I switched to one click when I'm used to double clicks. But anyway, beautiful entry here. Number one, because we have odds behind it right off the bat. Number two, from a personal standpoint, I'm a big fan of range breaks since the open. Now, even if this wasn't a Holly trade and I came about it right here, I would have been all over it because of this nice little sideways action here. We get the down push on the opening candle. We get some sideways action here. Comes down here and breaks. You know, it's just a beautiful entry no matter how you slice it or dice it. A lot of the times when I see these, instead of just taking my normal share lot, I'll go a lot heavier because the risk is in place, and it's my favorite pattern as well. So gave us a little bit of profit to begin, gravitates back up to the entry line, throws a few, jabs here, but nowhere near our hard stop, right? And then eventually comes back down here and capitulates and heads south, right? So Holly gets out about right here because she's programmed to do it. Now, after seeing this range break here and just these consecutive down candles, we can make the decision to stay in the trade, and that is what risk on is. Many people get it in their head. They have to pick, oh, well, I'm going to go risk off or risk on to start the day. No, it's easily dealt with on a trade by trade basis, right? Things are working, not a whole lot of wiggles are being thrown here. So we could have easily said, you know what? I acknowledge that you're getting out of the trade, Holly. I'm going to stay in it because I think there's more meat left on the bone. And in this case, you would have been handsomely rewarded. And then once a stock like this is on your radar, let's say you took a couple of hundred shares with Holly here. We get the breakdown. We get this gravitational pull back up. But then it sets up again. Oops, wrong option. Another nice little clean break here before the majority of the short-term move occurs, right? Now, of course, are we all going to be willing to sit wiggles like this? Probably not, but maybe, because let's say you scaled out of this on the way down. Hey, your entry price is way up here, right? A lot of people will do what I'm about to show you guys, and that's just on your remaining lot that you're willing to take that additional risk on, I should say. You want to protect what you've already made. You've locked in the profit on maybe half, 2/3 of your position. So what do? The part that's still open, there's going to probably be wiggles. So you set that for a break-even stop loss. In the case of NASDAQ today, never got back up there. So you would have been able to successfully sit these wiggles and get that last push towards the end of the market there. All right. It's just about protecting your profit, staying in if you think there's more meat left on the bone, while at the same time, not letting it get into the negative territory. And sometimes they'll get you on a break-even stop loss. Sometimes they will not. But you got to take a chance. More risk, more reward. So you see, that is the method in which you can try to extract some of this spread here between risk off, risk on. Take another look here. Not so drastic here, but the same thing applies. And of course, on this one, we can see Holly getting out, for a 5-cent winner, right? So we could have made the decision. All right, do we want to stay in this one? Do we want to stick to our hard stop? Do we want to, obviously if we use the break even on this one, it never really moved that much. So that might not have been the wisest thing to do. All right. But staying in the trade versus getting out when Holly does, a 40-cent spread in there, right? So once again, the hard stop never got violated. Downdraft of the day, based on what we saw with compare count windows, coupled with the fact that Holly had a hardcore downward bias today, maybe that gives us the confidence to stay in here and stick to our hard stop, right? Because that's why they're there. If we're wrong, this is what we're willing to lose. So I'm trying to look here to see a good example of a trade around here. Okay. A trade around. What is that exactly? Well, in this case, we can see Holly took a stab on shorting save right here, right? Now, of course, we never knew exactly what the trade was going to do. We hope it works, but no. As soon as we get into it, boom, a push, push, push up to the stop area, right? Stopped out. Happens. Happens to the best of us over and over, all the time, every day. That's just the nature of the market. Now, seeing as how we're all humans here, and presently there's no way to automate Holly, well, we're probably not going to be in everything because we're just not that fast, right? Maybe we took the first couple and got distracted. Maybe we're also paying attention to some of our other windows, right? Because Holly's just one part of trade ideas. Got a gazillion other types of windows and things that you can watch as well. So let's say you missed this trade or you didn't take it, but you look over at the blotter and you're like, ooh, I see this one's way down, and you pull it up. Maybe it's before the stop got triggered. Maybe it's after the stop got triggered. But what you're going to find, not all the time, but a lot of the times, is you barely get stopped out, and then it rolls back over and goes the way that you want it to. Now, I know some of you out there were probably in trades from other mechanisms where this happened, right? Going back, it's just the nature of the beast. But sometimes, once we see that stop out occur and we're thinking, yeah, okay, a little wick here, this candle opens up, man, you know what? I could get short at the stop area, use the top of that wick as my risk, and take advantage of what you've seen Holly be a part of. Hearkening, once again, Steve's going to know what I'm talking about here, but before the internet got evolved enough, we actually had to go into an office to trade, and there was always the guy that was getting stopped out, and we'd take advantage of his pain, very much in a fashion like I'm showing you right here. So see, sometimes you can take that second entry around the stop area, and what you'll find is they act as these pivot points. All right. Now, why do they do that? Well, we could talk about stop hunting algorithms and go down that rabbit hole. But whichever thing you choose to believe about why these things do this, they do it pretty consistently. I mean, how many times, whether it's a long or a short, have you been stopped out by a penny, 2 pennies, only to see the thing turn and burn the way that you want it to be? So keep that in mind. Sometimes we hop on something with Holly immediately, it goes our way. Other times you're going to see her get stopped out, but guess what? There still might be opportunity there once you get used to interacting with the AI in this capacity. All right, so we had huge compare count readings today to the downside. We had the AI all modules with the exception of Holly Neo just stacking the deck short right off the bat. And then we saw what happened to the market. You're going to see this more and more as you spend time with this technology. Steve and I can attest, AI came online back in 2016. We've had front row seats from the very beginning. Now, you've also heard us talking about, well, Holly can't be automated yet. When's it coming? Well, it's slated for about the first of the year. Just to reiterate, Brokerage Plus is coming out of beta this month. So don't forget, if you've been on the fence, hop in there. That way you're grandfathered in with no additional charge. After the 15th, it goes to a $1,500 add-on. Now, because we're working so diligently, because we want to see this come out too, I took the liberty of getting a screenshot from our development team today, because guess what? When you load your own strategy that you've made into Brokerage Plus, well, then you set up all your trade instructions, very similar to the way you backtest something in the odds maker, and then boom, you let that thing go. You want it to go auto, have it get you in, get you out. Okay, you don't want to have it make the entries for you and you manage the exits, which, by the way, I'm a big fan of that method, more of a gray box than a black box. Yeah, everything works perfectly, but there's a little bit more development into bringing Holly live to where every morning the Holly strategies show up in B+. You want to run a strategy, you just click the box. But of course, we've got risk on, and we've got risk off to deal with. So when Holly becomes available for auto trading, all of that functionality has to come along with it, right? Do you want this strategy to go risk off today, or do you want to go risk on? Do you want to do the 50-50, which is, I know I sound like a broken record, but, makes a lot of sense. You got 100 shares, you got a 200 lot position, doesn't really matter the share size. In the future, when Holly automation is available, hey, on this strategy, I'll do half risk on, I'll do half risk off. All right. So that's why it's taking a little bit longer to get Holly into B+, because all the functionality that we talk about has to come with it. Now, the screenshot you're seeing today, these are live executions. Okay. This is what the blotter looked like. Now, what do you notice here? You see how there's a minus symbol over here? Because these were all shorts. All shorts. And, people like myself, like, give me the screen down. I got to go through here and check all your slippage. As we talk about ad nauseum, right? Slippage when back testing. What is slippage? Well, it's the difference between the price that the computer marks when something comes out and the price that you actually get. So, a lot of these fills today, 3-4 cents of slippage, which, man, in a live environment such as this, you can still see what the P&L totals were. And by the way that Dan was running these orders today was risking, believe it or not, $35 a trade, right? If he stopped out, I only want to lose $35, and it gets you into the proper share size over here to facilitate that, right? Notice, you got 106 shares of AAN, 136 shares of DERM, 81 shares of TSS, okay? So testing is going well. We still have a ways to go, but just wanted to give you guys just a little snapshot, little peek into what's going on behind the scenes, because we are feverishly testing in a live environment to get this technology tightened up and available to you guys as soon as possible. So keep that in mind. People that are grandfathered in are going to have first crack at this, right? And then we're only going to allow 1,000 people at that $1,100 price point, and then we're going to see how it goes. If things are going well, we'll enable another 1,000, and you guessed it, it won't be $1,100 anymore. It'll be more than that. Okay, so the best deal is to get in before we start charging for it, and that deal ends Thursday. So keep that in mind. All right, so therein is the Holly recap, right? Risk on, risk off, trade arounds, pivoting around the stop out areas can sometimes be capitalized on. Now let's talk about other things. We've all got our bread and butter windows, right? The ones that we just have to see each and every day. Why is that? Because we know that not all symbols coming out of there are going to be timed in the capacity that we would like them to, but that's what it's all about. And this goes back to something Steve was really talking about over and over last week, along with myself, and that is a user's propensity, especially when they're newer, to create the perfect alert, which, by the way, ladies and gentlemen, does not exist, right? We want to create high quality information streams that we know have all the characteristics of what we're looking for. But what about the second part of the equation, which is timing, all right? And I'll get into timing here in just a second. And as you can see here, man, no longer buy the dip, sell the rip, no longer buy the opening range breakout to the upside, but it's short that opening range breakdown. Okay, of course, we still want quality and timing. All right, quality and timing synonymous with one another. So, of course, you see the first one here, GS, as Steve was pointing out earlier, Goldman Sachs. And so, let's take a look. All right, once again, 5-minute candles here. Turbo breaks up, or excuse me, I'm so used to saying up. Turbo breaks down this window right here on the big boys, 4 billion cap and higher. Look at this entry signal. We get the downturn, you know, in the opening 5, 10, 15 minutes, and then what do we got here? This little flagging action, establishing this real nice, comfy, little tight opening range, you know, with the high up here and the tightening up here. And then what do we have? We have Goldman Sachs coming through here telling me, hey, Goldman Sachs is hitting a new low. And by the way, it's doing crazy big volume today. And I'm thinking to myself, ooh, this is what I look for. And by the way, this, you know, I'd already scanned through 30, 40, 50 symbols before I stumbled across this one. Why does this one stand out? Because of what you're seeing right here. We get the break point right here. Now, you can see I've labeled the risk here. Why is that the risk? Because on 5-minute candles, if this is the entry from this nice clean break right here, not including the entry candle, we want to use the prior 15-minute high, which is this guy right here. So look at your tiny little risk area. And by the way, never even acted like it was going to stop out there. And look at the big, fat, juicy reward area. All right. And by the way, as Steve said earlier, might be one to keep an eye on moving forward tomorrow. Now, would we just want to jump in on the open? Probably not. You know, these patterns right here that you're seeing, they typically take at least about 30 minutes to show themselves, right? So it's all about knowing the animal that you're hunting, which they all look like this or very similar. Some aren't near as pretty as this, but this one was just absolutely gorgeous. Reminds me a lot of the NASDAQ trade that Holly signaled, right? Goldman Sachs was even a lot tighter, but you get my drift here. Same pattern, right? Same pattern there, same pattern there. Lots of different ways to ask the same question, ladies and gentlemen. Lots of different ways. Okay, so Goldman Sachs, just pristine. FTCH, once again, downturn on the open. What do we get? This little sideways flagging action. You got to use that wick as the low. Now, some people may differ from that. A lot of people like to use candle bodies, whether you use the wicks or the bodies, completely up to you. But we can see the action is the same. The quality is the same. This is quality, all right? You know, if we just saw something going straight down, we can't make anything of that. This is what gives us low risk when we start to see this little consolidation after the hand has been, you know, if we were sitting at a poker table, this action right here is the guy scratching his nose, giving his tell, right? And then we see the sideways action as we break right here, not including the entry candle. We can see that indeed the prior 15-minute high was here. Not as good a risk reward as we saw on Goldman, but nonetheless an opportunity to exit for a decent profit and looking like slightly over a 2x on risk to reward. All right. We had TTD. Same thing, right? Now, if I don't have this tight consolidation here, then the pattern is not intact. It's that simple, all right? Once again, same story, different person telling the story, different stock. Range break with volume, prior 15 minutes as risk, an opportunity to exit. Some are going to be a lot. Some are just going to be mid-grade, decent. This is still a very decent trade. I could do these all day. We're going to do one more short, and then, as you might be thinking, there's always something going up in a down market too, and we'll get to that one in just a second. But here we go, Ericsson. I mean, once again, it just, these signals here, and let's see here. Okay, this one didn't time exactly at the break, but guess what? This was the initial low. So what do you see here? All right, once you see this sideways action, you just wait for the break, right? Once again, low risk, using even the top of that range right there. And then it finally, because this one was a little bit lower volume, you can see here that it didn't even finish the day on 1.0. But if we flock back around here to Goldman Sachs, I mean, always a good idea. Glance down at your single stock window or wherever it is that you're displaying relative volume and just take a peek. The higher, the better. But looking back at Ericsson here, once again, sometimes you're going to find them just in these little ranges and they'll pop a low. Still a good, still a very good thing to keep tabs on moving forward. And you can see eventually old Ericsson gave up the ghost as well, right? So preferably higher volume, but more times than not, or I can't say more times than not here, I'd rather have the high volume, but a lot of things will make moves on slightly below, slightly above. It's really about the quality of the pattern and the risk area, which even though Eric was not doing extremely high volume today, the pattern worked in any case. Now, those all came from turbo breaks down, which spits out quite a few symbols. But even on a conducive day like this, if we're having to filter through 20, 25 symbols before we find one where the timing is correct, hey, welcome to trading. That's what it's all about. Now, of course, turbo up, family, no resistance. By far and away, my favorite window when we were just doing nothing but go up, because this is kind of the same configuration, high volume, but to the upside. They don't have any resistance, meaning they're hitting all-time highs. Now, in this market, you don't have a whole lot of stocks. Matter of fact, I didn't even have a whole lot of stocks coming through here today. Pull them up, look at them, no thank you, with the exception of this guy, all right? Once again, the pattern is the pattern. HCI setting a high shortly after the open, doing the sideways dance, slowly creeps back up to the high and pops out on extremely high volume, right? Plenty of time to get this, and you might look at it initially and go, wow, is that thing even doing any volume? Let me see, look at the daily, doesn't look too bad. But hey, in this candle right here, 20,000 shares, got almost 21,000 shares traded in this 5-minute candle right here. So, you should have been able to get a fill in this one. 20,000 shares in 5 minutes. Once again, just wanted to reiterate the pattern is the pattern. Even in a down market such as this, there's always going to be the exception. It's just that most of the opportunity is going to be to the downside. And thank goodness, with a compare count window and Holly kind of telling us that in the first 15, 30 minutes, hey, placing all my bets on the short side, said Holly today. Hey, compare count window, massive selling above 60%, which is typically, only 1, 2, 3 days out of the month, assuming we stay in this reddish type market, the exact opposite of seeing them infrequently to the upside above those parameters. So if you would like that compare count window, or you would like the turbo breaks down window, the easiest way to get those windows, or any of the windows that you see Steve, Andy, Sean, or myself talking about, all you have to do is navigate over here to channel 4, click on channel 4. Why is it called channel 4? Because there's me, Steve, Andy, and Sean. There's 4 of us. And these are all of our favorite windows. See the compare counts down here. Feel free to explore them. Feel free to change the settings up. If you don't like the big caps, get rid of the market cap. You know, you're only limited by your imagination as to what types of things you can keep count of that might actually make sense. And I do believe that that's all I got, Steve.
Sure, just remind them if they make a change on the cloud or on those scans to just first save it to their cloud after they make those changes, because any changes you make on channel 4 will not stick the next time you go to channel 4 to get it.
Right. Well, let's say you came over here after watching Andy's office hours. You're like, I really want extreme volume high-low pro, which is kind of similar. It's a kissing cousin to my turbo brakes up and down, just slightly different tweakings on the volume parameters. But let's say this is the guy you're looking for. You found it. Now, if you want to make it your own, it's just as easy as doing this. Right click, save or share it to cloud, and save that guy. That way, say I come back over to my default layout, all I'd have to do to retrieve that window, file, load from cloud, it'll be sitting right up here at the top. Just have to click it, hit load, find a home for it, save my default layout, and then boom, this guy is going to show back up wherever you saved him to. So that's the easiest way to get all of our favorite windows. And having said that, Mr. Scott, if you would like to come in and walk us out, tell everybody about that discount code and maybe some of the other things we have coming down the pipeline, like how to watch the replay of the summit, we're ready for you.
Hey, thank you. Yeah, a couple items on the way out. Do remember there's only a couple of days left to get grandfathered in. You need to be a premium member before the 15th to be grandfathered into getting Brokerage Plus at no additional cost. Otherwise, you can start to purchase a reservation for the release on November 15th. If you're not going to become a premium subscriber before then, you'll learn a lot more in the next few days. So just go to tradeIdeas.com/brokerage plus for more info on that. A lot of you have already seen the summit videos, but if you haven't yet, just go to trade-ideas.com/summit video 2018. That'll take you directly to a page where you can watch each of the video segments. We also are releasing, I think this week, all the individual videos as discrete videos, but you can watch them on that page as well. So get in on that, trade-ideas.com/summit video. It's a lot of great content, and it's all free to you. You can learn a lot. There's an ebook out that's very timely for this year. It's been getting a lot of traders through the year at trade-ideas.com/ebook. Both Jamie and Steve contributed chapters to it. It's how to win in a post-BTFD market, which we're pretty much in. So get it and get those strategies. There's a podcast. It's out every week. Just search for Trade Ideas Podcast wherever you listen to your podcast and add us as a subscription. Then you can get the newest ones as they come out. And just go, and you can also look through the archives and find our guest podcast where we've had guests on. Those are also good ones to listen to. There's a code good this month, saves 15% off your first month or year of Trade Ideas. Use it before the end of the month. Holly Giving, all caps. You can use that anytime this month until the end. And that'll save you 15% off the first month or year of Trade Ideas. Those of you that are standard subscribers looking to upgrade, you can use this to do an upgrade and save the same percentage. Go ahead and apply that when you go to the account management section after logging into the website and click on Change My Subscription. Thank you, Jamie and Steve. We'll get a recording of this up later on tonight or tomorrow. Questions should be sent to info@trade-ideas.com. That's the best place to send any questions because it goes into our help desk software. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at TodayTrader. And Facebook.com/TradeIdeasPro is the page to like on Facebook so that you can keep up with all of our new stuff. Thanks, y'all. Thanks, Steve and Jamie.
Hey, thank you, Scott. Thank you, Steve. Thanks, everybody, for attending, and we'll see you guys tomorrow.
Yep, bye-bye.
Bye-bye.